Hi, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on today's currency pair, the Australian dollar to the United States dollar. And first, we will be talking about fundamental analysis before we move right down ahead to technical analysis, which is purely what we're going to be seeing on the chart. Now, we have noticed that the AUD USD retreats from its monthly high from the monthly chart. 0.700 on dicey markets. Aussie inflation Fed eyed that the AUD USD has eased from a 5-week top peers and recent gains amid sluggish sessions. The growth concerns have, of course, made the preferred charters join anxiety ahead of Australia Q2 CPI to tame the bullish bias. Now, the US consumer confidence will decorate today's calendar. Buyers keep our reins while the AUD USD stepped back from a monthly high while taking offers to peer intraday gains around 0.6960 duly early Tuesday morning in Europe. The Aussies peer latest pullback could be considered the market's preparations for the key date events. However, softer US dollar and the hopes of firmer Australian inflation that will keep buyers hopeful. And with that said, the US dollar index rebounds from its intraday low to 106.37, down 0.10% intraday by the press time. In doing so, the greenback gauge drops for the fourth consecutive day, despite the latest bounce. Now, the US dollar recent recovery amid the AUD USD pair has pulled back could be linked to the talks surrounding some economic weakness in the US and abroad. And the recession fears initially gained clues from Monday's Chicago Fed National Activity Index for June and Dallas Fed Manufacturing Index for July, preceded by Friday's US S&P Global PMIs for July. While on the same line was Walmart's slashing of profits forecast and fears of lesser consumer spending. It's worth noting that a rebound in the US Treasury yields from the daily low of 2.79% at the latest also underpins the rebound in the US dollar and weighs on the AUD USD. Now, moving on, AUD USD traders should pay attention to today's US CB consumer confidence for July, prior at an estimated 98.7 and charter surroundings recession for fresh imports. However, Wednesday's Australia Consumer Price Index for the second quarter would mean that expected 6.2% yearly versus the 5.1% prior will precede the Federal Open Market FOMC meeting to mark the key day for the Aussie peer traders. It's worth noting that the Australia's push to China to remove trade sanctions could join the recently mixed comments for the RBA, Reserve Bank of Australia, to weigh on the quote. If the QP CPI arrives short of market forecasts. Now, down to technical analysis. Despite the run-up, we have noticed that the AUD USD has remained inside the short-term trading area between 0.6955 and 0.6975 levels, comprising a downward sloping resistance line from early April and 50 DMA in that order. Now, our total today's last price was being seen at 0.6963, while a daily change of 0.0012 and a total daily change of about 0.17%. And today's daily open was seen at 0.6951. Now, what to expect for this? We have noticed a very strong resistance point at the 0.69902, and a probable push up to this zone means a breakout to a new zone of 0.70s, of course. Now, if an alternative scenario to this, if there is a slashback or pullback from this, it means that it has created a strong resistance zone once, not twice, but 3 times. And a retracement could mean it will come down to the most recent support at 0.68903. So if we're to make a trade, I'm expecting this, we are having nothing less than 88 pips from this trade, which of course is good money. So that's our technical analysis on today's currency pair, Australian dollar to the United States dollar. Now let's move over to the stock markets. And right now, today on today's stock market, we'll be having a dig at Walmart. And we have noticed that the WMT stock has confirmed a consumer problem in recent weeks, had seen a sharp decline in indexes, showing consumer sentiment on both sides of the Atlantic. It seems that the war and inflation and interest rate hikes or the announcement are effectively holding back consumer demand, which in turn could be reflected in expected stagflation or recession. Now, data on consumer attitude toward spending their money was confirmed yesterday by the US retail giant Walmart, and Walmart has more than 10,000 stores and numerous e-commerce sites with some 230 million customers from over 24 countries visiting each week. With the fiscal year 2022 revenues of $573 billion, Walmart employs about 2.3 million workers worldwide. Yesterday, after the session, the company noted that consumers are reducing their spending due to rising prices, and the company reported that the consumers are focusing on necessities, including food, while spending less on clothing or electronics. Thus, Walmart slashed its quarterly and annual earnings estimate expectations. As a result, the company's share price fell about 10% after session trading, dragging other retail-oriented companies down with Target fell by more than 5%, Macy's by more than 4%, and Amazon by more than 3%. So soon Microsoft, Visa, Coca-Cola, and the rest of them will follow us. Now, what to expect from this? We have seen a probable double head and shoulder pattern, and this is most likely to the most recent resistance at 133.19. Now, if you're not a breakout of this with me, I'm looking for fallout to the next zone, which is the next support zone, which is at 129.90. So if we had to make an entry to this trade and let the trade run up to this point, we're looking at nothing less than 20 pips or more from this trade, which is good money. That's our technical analysis on today's commodity, Walmart. I remain your host, Nick. Bye for now.